If you think the economy you're living in today will look the same 5 years from now, think again. Because according to Warren Buffett, the world's most successful investor and one of the richest men alive, most people are sleepwalking straight into a financial storm that will wipe out fortunes, destroy retirements, and change how we think about money for decades to come. And the scariest part? The signs are already everywhere. Let me ask you a question. When the world's most successful investor, a man who has built a $100+ billion fortune by understanding markets better than anyone else, says, "Be fearful when others are greedy and greedy when others are fearful," what do you think he's trying to warn us about right now? Because make no mistake, Buffett's latest moves and messages aren't random. They're signals, and they're all pointing to one uncomfortable truth. Most people have absolutely no idea what's about to happen next. To understand Buffett's warning, we have to first understand something about how he thinks. Unlike most investors, Buffett doesn't chase hype. He doesn't follow trends. He doesn't care about fads. He looks at the fundamentals: debt, earnings, valuations, interest rates, and above all, human behavior. And right now, all of those fundamentals are flashing red. We are living in a world drowning in debt. Global debt is now more than $300 trillion, a number so massive it's almost impossible to comprehend. Governments are borrowing more than ever, companies are leveraged to the limit, and consumers are maxing out credit just to survive. And yet, the stock market keeps hitting record highs. Real estate prices are soaring. People are spending like there's no tomorrow. This is exactly the kind of environment Buffett has spent his life warning about. Because what happens when everyone believes the good times will never end? They stop preparing for the bad times. They stop thinking rationally. They get greedy. And when greed takes over, collapse isn't a possibility. It's inevitable. Buffett knows this better than anyone. He's lived through multiple market crashes: the stagflation of the 1970s, the Black Monday crash of 1987, the dot-com bubble, the 2008 financial crisis. And every single time, the signs were there before the crash. The difference between those who lost everything and those who built generational wealth was simple. The winners paid attention. Here's something most people don't realize. The stock market isn't the economy. The market is driven by emotion, fear, and greed. And right now, greed is everywhere. Companies with no profits are being valued in the billions. Meme stocks and speculative assets rise and fall overnight. Everyone wants to get rich quick. But Buffett has a different philosophy. He once said, "The stock market is a device for transferring money from the impatient to the patient." And right now, impatience is at an all-time high. So what exactly is Buffett warning about? It's not just a stock market correction, although that's likely coming. It's not just another recession, although that too may be unavoidable. His warning is deeper. He's saying that the entire financial system is more fragile, more overvalued, and more disconnected from reality than it's been in decades. And when that system corrects itself, as it always does, it will catch millions of people completely off guard. One of Buffett's biggest concerns is inflation. Most people think inflation is just about higher prices at the grocery store. But it's much more dangerous than that. Inflation is silent theft. It slowly erodes the value of your money without you realizing it. And when central banks print trillions of dollars to stimulate the economy, they make the problem worse. Buffett has warned repeatedly that holding cash during high inflation is one of the worst financial decisions you can make, because your money is losing value every single day. But here's where it gets tricky. If cash is dangerous and the stock market is overvalued, where do you put your money? This is where Buffett's wisdom becomes invaluable, and where most people get it completely wrong. Instead of chasing the next big trend, Buffett focuses on timeless principles: buying quality assets, understanding what you invest in, and holding for the long term. He often says, if you aren't willing to own a stock for 10 years, don't even think about owning it for 10 minutes. That's not just good advice. It's survival. Because when markets crash, it's not the speculators who win. It's the disciplined investors who own businesses with strong fundamentals, real earnings, and durable competitive advantages. And it's not just stocks. Buffett's actions show another crucial lesson. Diversification is not just about owning different companies. It's about owning different types of assets. That's why he keeps a significant portion of Berkshire Hathaway's portfolio in cash and treasury bills, not because he loves cash, but because it gives him flexibility. When the market crashes, he's not panicking. He's shopping. This is the essence of Buffett's strategy. Be prepared when others are not. When markets are booming and everyone is celebrating, he quietly builds cash reserves. When panic sets in and prices collapse, he moves in and buys assets at a discount. That's how he turned crises into opportunities again and again, and why he's warning that now is the time to prepare. Let's break down what preparing actually means for everyday people, because Buffett's warning isn't just for billionaires and hedge funds, it's for you. The first step is financial literacy. Most people don't understand how money, debt, and markets actually work. They think saving a little in a bank account and contributing to a 401k is enough. It's not. Inflation destroys savings, markets crash, and pensions fail. If you want to survive what's coming, you need to understand how to build and protect wealth yourself. Start by learning how to read a company's balance sheet. Understand what makes a business valuable. Know the difference between price and value. Buffett often says, "Price is what you pay, value is what you get." A company's stock might be expensive today, but if its future cash flows and competitive position justify it, it could still be a great investment. Conversely, a cheap stock with no future is a trap, not a bargain. Second, diversify intelligently. Don't put all your money in one stock, one sector, or even one asset class. Own businesses, but also consider real assets like real estate, commodities, or even dividend-paying stocks that generate income regardless of market conditions. And keep some liquidity, cash or equivalents, so you can act when opportunity knocks. Third, stop trying to time the market. Buffett himself admits he has no idea where the market will be next month or next year. What he does know is that over the long run, markets reward patience and discipline. If you invest in quality and hold through volatility, you dramatically increase your chances of success. Fourth, control your emotions. This might be the hardest lesson of all. Markets are driven by fear and greed, and those same forces can destroy your portfolio if you're not careful. Buffett's calm, rational approach is one of his greatest strengths. He doesn't panic during crashes, and he doesn't chase bubbles during booms. He stays focused on the fundamentals, and you should too. Now here's the part most people miss. Buffett's warning isn't meant to scare you. It's meant to wake you up. Because the truth is, every crisis creates opportunity, but only for those who are prepared. When the 2008 crash hit, most people lost everything. Buffett, on the other hand, made some of the best deals of his career, investing billions in companies like Goldman Sachs and Bank of America at fire sale prices. Those moves generated tens of billions in profits when the market recovered. The same thing will happen again. Most people will panic when the next downturn arrives. They'll sell their investments at the worst possible time. They'll move into cash just as inflation accelerates. They'll try to wait it out and miss the chance of a lifetime. Meanwhile, the prepared will be ready. They'll have liquidity. They'll know what assets to buy. They'll understand value when others see only chaos. And they'll come out of the crisis far wealthier than they went in. That's the heart of Buffett's last warning. He's not predicting the end of the world. He's predicting the end of complacency. He's saying that the easy money era, where governments print trillions, markets rise endlessly, and everyone feels like a financial genius, is coming to a close. And when that ends, most people will realize too late that they were never actually secure. But you don't have to be one of them. You can choose right now to think differently, to act intelligently, and to prepare before the storm hits. You can choose to study financial history, understand economic cycles, and build a portfolio that doesn't depend on everything going perfectly. You can choose to follow Buffett's timeless principles: value over hype, patience over panic, knowledge over speculation. And if you do, then when the crash comes, and it will, you won't be one of the many who lose everything. You'll be one of the few who see the chaos for what it really is, the greatest wealth-building opportunity of your lifetime. So here's the question you need to ask yourself today. Are you going to keep living like nothing's wrong, ignoring the warning signs and hoping everything magically works out? Or are you going to take responsibility for your financial future, educate yourself and position yourself to thrive, no matter what happens next? Because as Buffett himself once said, only when the tide goes out do you discover who's been swimming naked. And right now, the tide is starting to go out. Most people don't see it yet. Most people have no idea what's about to happen. But you do. And that gives you a massive advantage if you're willing to use it. The choice is yours. Prepare now. Learn now. Act now. Because the biggest mistake you can make is assuming tomorrow will look like today. It won't. And the decisions you make in the months ahead will determine whether you're wiped out by the coming storm or whether you use it to build a future far wealthier and more secure than you ever imagined. The warning is clear. The signs are obvious. The time to act is now.